The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Opening call, not very.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 8:30 a.m. on Wednesday morning. 60 minutes to go until that opening bell, and we got markets escalating to the downside yet again. Right now, you're looking at an S&P negative by about 52 points right now, trading at 3330. We got the Dow futures negative by 482. That's 1.76% in the Dow, 26,883. We got NASDAQ off 1.3%, 152 points in the red at 11,475. We got oil down almost 5%. We have gold down about $30. We have the 10-year yield 0.754%. We were just sitting at almost 0.85% not that long ago. We'll jump around to some of the action today. There's your 10-year. Talk about a rise in price and a decrease in that yield. Right now, we're back above 139 to 139. We'll call 139 flat right now, up 5.5 ticks. You see where we were last Thursday, 138.05. You back it up even a little bit more than that for some context. Pushing it back about 10 days. There you see the complete collapse from a couple weeks ago down to 138.05 on Thursday, and since then it's been straight up. We're now under, or approaching, I should say, about 0.75%, the yield on that 10-year. All right, commodities. There's your sell-off on crude. Now that's a 30-minute. Let's put it back to a 15-minute. 15-minute bars from yesterday. We were approaching $40 towards the end of the trading day. This morning, right near the lows, we have $37.76. The price of crude. There's gold, quite a collapse as well. Gold off $29 right now at $18.82. You see the sell-off really escalating from about 2 or 3 in the morning. Silver down 74 cents, $23.83. And what else we got going on? Jumping over to crude, we covered that, $37.76. And the VIX this morning, as you may expect, the S&P's down 52 points, 36.99 in that VIX. Jumping to a daily to see the recent highs we've had, getting them on the chart, 38.28. That would be the next high that you may be coming into, that high from September 4th when we had a little market sell-off. Beyond that, you're talking about 44.44 from June 15th. The high we had in the VIX on that occasion, but quite a steady rise. Taking a look at the S&Ps, excuse me, there's your daily. Got a Fibonacci retracement back here. The complete run from 2174, quite a run, right? You're talking about 2174. We trade up 1,400 S&P points from a low of 2174. Pre-COVID highs, we're talking about 3397. Now below those levels. The low we had towards the end of September on the S&Ps, 3198. We're now about 130 points from there. But you really put things on even an hourly. You see the slide from about October 20th, quite a downtrend. We're talking about 35.41. We're currently sitting at 33.27 in the S&Ps. You're talking about 200 plus S&P points on that slide. Quite a slide indeed. All right, what else we got going on? It is a big week of earnings. 186 stocks in the S&P reporting earnings this week alone. We got Microsoft last night after the bell. They're down. They're down about $5.50 this morning, trading with a bid ask of just under 208 right now. That's an hourly chart, putting it on a 5-minute to see the volatility on their numbers. You see the volatility right away. Earnings call begins at about 5:30. We get some guidance that the market does not like, and Microsoft trades from about 213 down to 209. We're now under that level with the market accelerating. S&P's now down 55 points. You got Microsoft trading at 208. For some context on where we've been on Microsoft, you're going to open, I'm going to put it right at about 208, kind of an area we've been oscillating around. The lower end of this consolidation, maybe just below 200, 196.38. The higher end, of course, 232.86, but we're going to open at about 208 today on Microsoft. Getting into some of their numbers, dips on week revenue guidance. So the numbers, I mean, as they came across, I was sitting in front of my computer last night. It was about 4:00, 4:06 maybe, 4:08, 4:10 last night, 5 to 10 minutes after the close. They earned $1.82 a share. Market was looking for $1.54. How about a revenue beat to the tune of about $1.4 billion extra over 90 days? 37.15 billion. Market was looking for 35.72. With respect to guidance, that's the problem. Microsoft expects, here's the deal, 39.5 billion to 40.4 billion in the fiscal second quarter revenue. The middle of the range at 39.95 implies 8% annualized growth. The market was looking for 40.43 billion. So Microsoft putting that basically just above the range of $1 billion that they expect on revenue, suggested that softer business demand would continue to cut into Windows licensing revenue. So market a little freaked out about that in particular because fiscal first quarter revenue grew 12% on an annualized basis, down from the 13% in the prior quarter. Commercial PCs cratered 22% months after support for Windows 7 ended. And here's a cool chart. It just breaks down growth, products and services growth. They go quarter by quarter from 2018, 2019, 2020, and Microsoft just announced fiscal year 2021. And you see the positive nature across the board. For the first time, you're dealing with negative action in a long time since the second quarter of fiscal 2019. Windows OEM and search ads down 10% after being down 18%. Makes sense, right? A lot of businesses cutting back that advertising. Search ads down. A lot of growth there. Even Azure, 48%. The cloud growing. Intelligent cloud segment featuring Azure, enterprise services, GitHub, and server products such as SQL Server, Windows Server, $12.99 billion in revenue, up 20% year over year and more than 12.73. So they basically beat across the board. That's why you saw the huge volatility even to the upside on Microsoft initially. But with the S&Ps accelerating, and we are, check out that chart right now, 33.25. We just dropped from a price point of about 33.31. You see the sell-off really begin at about 33.70 at about 2 in the morning. Over in Europe, you got the DAX, folks, down 3.55%. That's right. The FTSE down 1.9%. The CAC roll 3.2%. Big numbers over in Europe, much bigger even than what we're dealing with right now in terms of our markets. You get the S&P down 1.7%, FTSE's down 1.9%, all right? But DAX is down 3.5% right now. You get the Dow off about 1.9%, approaching 2%. And you see these slides we have. We put it on a 20-day. I mean, you're talking about now, we've given up 2,000 Dow points just from where we were trading at, folks, 16 days ago. We're 6 days out from a presidential election. We got a huge day of earnings tomorrow. We're going to go through some of the other companies with earnings today. And let's see what we got. As we got a few seconds here, which we wrap up this segment, we'll jump to Boeing. They're going to cut thousands of jobs through 2021. Long air travel slump. That's probably putting it lightly. They aim to have a staff of 130,000. They're talking about that's 10%. They currently sit at 160,000 right now. Right now. The loss, though, $1.39 a share. The market was looking for $2.52. And revenue, actually a beat by $200 million as well on Boeing. There's the action on Boeing this morning. A little bit of volatility, but kind of right back to where we were. Boeing trading at 153.90 after spiking to 158. Stay tuned, folks. We got UPS earnings. We got GE. We got a lot coming up. We'll be right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So I got a chart of the DAX up here. The DAX down 419 points right now. That's what I have. The DAX, you're trading at 11,643. You're talking about 3.5%. The DAX is down, and you see the volatility. And we are back to, in the DAX, you're talking about May prices, folks. 5 months, we're back. We're back in the DAX to about May 27th, to be exact. And we just traded from a price point above 13,000. We're now trading at 11,643. You're talking about an 11% haircut in 16 days in the DAX. And what you're dealing with there is the potential more restrictions going into place as you see some pretty dramatic spikes. I was just pulling up some of the maps. Check it out in Germany, folks. What quite a spike they're dealing with. The first wave was up to about 5,000 cases a day, got it down to 500 or so. We're now we're at about 10,000 cases a day in Germany. You see the deaths beginning to spike up there as well. In France, talk about a spike. The first wave was only up to 5,000, 7,000 or so. We're now approaching 40,000 cases a day in France. Stark numbers, to say the least, for sure. You get into the U.S., not what you want to see when you pull up the numbers. I mean, pulling up the chart, there's our acceleration. We're now dealing with the 7-day average of about 73,000 cases, setting a record last week, Friday and Saturday, with 83,000 cases, according to Johns Hopkins, back-to-back days. Stark numbers, and that's what you're seeing the market reacting to. When you have an economy like Germany, Chancellor Merkel talking about closing restaurants for a period of the month of November, something you might see in France as well, as things really spiraling out of control over there in terms of some of those case numbers. Pretty stark numbers that they're dealing with in a big way. All right, jumping back to what else we got going on. As I mentioned, huge week of earnings, and they just keep going. GE shares trading a bit higher. Company posts a surprise adjusted profit. Revenue tops expectations. Maybe GE getting their house in order. How about a beat? 19.2 billion versus 18.73. Earnings 6 cents versus a loss of 4 cents. Jumping over to GE shares. There's your GE action. I'm just going to pull up these indices on the right that I'm used to so we can keep our eye on the market. You got the S&Ps accelerating lower, down 61 points now. There's GE on a daily chart. Talk about some woes. This morning, though, we're trading a bit higher, from $7.10 up to about $7.50. Jumping back to the S&P to keep our eye on it. These are 5-minute bars we're looking at, folks. Since I came on the air at 8:30, we were trading at 33.31. We've given up an additional 11 S&P points just in the last 15 minutes. All right, there's your GE action. What do we got? UPS. Profits rise 12%. Spurs home deliveries. The pandemic, not surprising to anybody paying attention to the amount of boxes showing up at their front door. Average daily volumes rose 13.8% on continued strength in residential demand. That last mile of delivery, right? UPS dropping those boxes off. Net income rose to about $2 billion or $2.24 a share. They were at a $1.75 billion a year earlier. Excluding items, they earned $2.28 a share. Estimate was only $1.90. Revenue, how about this? $21.24 billion. They only took in revenue of $18.32 a year earlier. UPS been a rocket ship, but not quite living up to the expectations there. Some of these equities, it's going to be really interesting. Thursday, Amazon, Apple, Facebook, Google, all after the close on Thursday. Before Thursday, we get some interesting companies as well. We get Yum Brands before the open tomorrow, this is. We get Dunkin' thinking about being taken private. Overstock.com, Keurig Dr. Pepper, Kraft Heinz, Comcast, Moderna, Molson Coors, Apollo Global Management, ConocoPhillips. Newmont's out tomorrow before the bell. And then after the bell, Apple, Amazon, Facebook, Google. We get Activision Blizzard, another big name out there. Starbucks is out there as well. MGM, Weight Watchers, WW as they're called now, Shake Shack, Cheesecake Factory, Twitter. I mean, so many companies on Thursday. We get GDP numbers tomorrow as well. So it's really going to be interesting when you're seeing some of these equities. UPS, I mean, talk about being priced for growth, but they come in with some strong numbers. But guess what? Microsoft, same deal, pretty strong numbers. It's all about what you're going to do in the future. You never want to miss on guidance in the next quarter. But man, I mean, you're getting a little bit of a sell-off on quite a rise in revenue, and something you might expect on some of these high flyers. I mean, Amazon, they're talking about it in the den this morning. We got 32.40 right now on this equity. Be interesting to see what they have to say, how much they took to the bottom line. Revenue probably going to be a huge number. We all are just ordering items online in a bigger way than we've ever thought possible. Pre-COVID, we're at 2,100 and change, down to 1,626. I mean, Amazon pretty relatively near that all-time high at 35.52. Don't be surprised if they are priced for perfection, especially going into Thursday before Election Day. They're coming out on the same day as we get a GDP number reading, which the GDP, I mean, Amazon is the economy in some fashions, right? You jump to a company like Walmart, the rise they've had. Target, look at this run, right? Up to 157. And then, of course, Home Depot, I mean, just chopping around from 260 to about 290 up there, and Lowe's as well, 165.14. All right, this market, folks, you don't give it too many minutes, and we're making new lows with every 5-minute bar here. 33.17. The S&P is now down a full 2%. You got the NASDAQ 100 down 1.7%, and the Dow off 2.3%. As I mentioned, the DAX is down 3.5% over there. Germany going to be dealing with some more pain over there for sure in terms of more restrictions, restaurants, more social businesses, unfortunately, going to be shut down. The U.S., we're waiting for the election. No idea of what may come for stimulus, but it's not coming before next Tuesday. That's for sure at this point, folks. All right, what else we got going on? You're going to get the Twitter, the social media CEOs. They're going to be in front of Congress. Facebook, Google, Twitter CEOs to tell senators changing liability law will destroy how we communicate online. What is up here is they have Section 230 of the Communications Decency Act that basically protects those platforms from legal liability for the posts of users using them. In recent years, tech companies facing more scrutiny over how they are moderating what is posted on their platforms. That is going to take some headlines today as well. In terms of streaming wars, you got Apple TV. They got a program count out with Jon Stewart. He, of course, was the host of The Daily Show on Comedy Central. Whatever you think about his politics, definitely a huge following as the battle for streaming picks up. Apple TV, I'm a huge Apple fan, and I kind of have no interest right now of subscribing for Apple TV, which I think says a lot, interestingly. But they had that big Tom Hanks movie that they got. They'll have Jon Stewart. It's just interesting how those firms continue to battle. Disney, we'll jump to in a second, pulling back. I mean, you want to talk about a pullback, folks. Disney, 120.50. For a quick story on Disney to see what we're dealing with now, I mean, we're back to the price point of April of 2019. The low of that bar is 114.64. We're going to open today just above 120. And you go below that level, and you're trading at prices before the world even knew any details of the Disney Plus streaming service, what it was going to cost, what they think they were going to do. Long term, there might be a lot of value getting into the price of Disney when you were under where the world knew, because, yeah, it seems easy to say, of course, they have 100 million subscribers on their platforms now. That was not a certainty when you were back in the middle of last year, beginning of last year, trading in the 115s. Stay tuned, folks. We'll be right back to finish up the show. Be right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Some of the companies, we got First Solar up here, accelerating higher on their numbers after the bell last night. You closed at just over 82. We spiked to almost 100. We're trading at 91.02 right now on First Solar. Pulling up what they got to say, more than double the 61 cents that the market was looking for. Earnings of $1.45 a share. Revenue considerably above the forecast. Solar equipment company said its results have not been materially impacted by the pandemic. They're not impacted. Pretty remarkable. Shares up, as you may expect. What else we got? FireEye, their numbers beat by 4 cents. Quarterly earnings per share, 11 cents a share. FEYE is their symbol. You see the pop higher last night to 15.42. We're trading at 14.20 right now on their numbers. And let's see, Caesars selling its Tropicana Evansville casino for $480 million. The story yesterday was Las Vegas Sands. Thinking about getting out of Las Vegas. That's another casino, Caesars. Talk about some max pain. Check out this chart. We'll finish it on a daily. 48.47, clawing it back from $6, though. Some of these gaming companies, folks, you want to talk about. I mean, Barstool Sports with Penn Gaming from $3, now trading at 57. MGM shares down to $6, trading at 21 right now for MGM. Jumping around to some of those other streamers we talked about, Disney. So as I was mentioning, just put this back on the weekly. Again, to put it in, that is when they first announced the details of the Disney Plus streaming service to know what you're dealing with in price. They actually launched November of last year, which is when they started announcing the numbers that they were getting, up to 153. Nonetheless, we're back to about 120 and 50 right now on that equity, right in the middle of this acceleration when the market first figured out that they were going to undercut Netflix in terms of price. They were going to package that in a bundle with ESPN, Hulu, Disney Plus, none the likes of all of it. And we'll finish it up with congrats to the LA Dodgers. Tampa Bay Rays couldn't get it done, unfortunately, but the Dodgers' first championship in 30-plus years, I think. Folks, stay tuned. We got a treat. Larry Pesavento, he's got a special guest coming up next. Joe DiNapoli, he's going to be on with Larry Pesavento for the full hour. Coming up live next with Trade What You See. S&P is negative by 67. Stay tuned.